Ever pondered upon the intricate world of crypto investments? Or perhaps found yourself intrigued by the sudden surge in the value of certain cryptocurrencies? Well, you're not alone. It's a fascinating realm indeed. Today, we delve into the depths of this digital currency universe and unearth some of the most effective strategies for crypto investments. Firstly, consider the buy and hold strategy. This is perhaps one of the most common methods employed by crypto investors. The idea here is simple. Buy a cryptocurrency when its value is low, hold onto it for a while, and sell it when the price rises. The pros of this strategy? It's straightforward, and anyone with a basic understanding of market trends can employ it. However, the downside is that it requires patience and a keen eye for market trends. Plus, the crypto market is notoriously volatile, which means prices can plummet as quickly as they rise. Next up, let's talk about day trading. As the name suggests, day trading involves buying and selling cryptocurrencies within a single trading day. This strategy capitalizes on the short-term volatility of the crypto market. The advantage of day trading is the potential for quick profits. If you're adept at reading market signals, you can make a decent profit within a day. The downside? It's time-consuming and requires a good understanding of market analysis. It's also risky. The crypto market can swing wildly within hours, and losses can be substantial. Another strategy worth noting is dollar cost averaging, or DCA. This involves investing a fixed amount in a particular cryptocurrency on a regular schedule, regardless of the price. The aim here is to spread out the investment over time, reducing the impact of volatility. The benefit of this strategy is that it mitigates the risk associated with sudden market changes. However, the downside is that it may take longer to see significant returns. Lastly, the ICO investment strategy involves investing in a cryptocurrency during its initial coin offering stage. This is when a new cryptocurrency is launched and its coins are sold at a low price. The upside is the potential for high returns if the coin becomes successful. The downside? It's a high-risk gamble. Many cryptocurrencies fail within their first few years, and the investment can be lost. In summary, the buy and hold strategy is a simple yet effective method for those with patience and a keen eye for market trends. Day trading offers quick profits, but requires time, market knowledge, and carries substantial risk. Dollar cost averaging is a safer bet for those looking to mitigate risk, but it may take longer to see significant returns. Lastly, the ICO investment strategy offers high return potential, but carries a high risk of loss. In the end, the choice of strategy depends on individual risk tolerance, investment goals, and market knowledge. Remember, while the world of crypto investment is exciting, it's also unpredictable. So always do your homework and invest wisely.